Everyone, this is Dr. D. Kritika, Department of Commerce with Computer Application, Dr. SNS National College of Arts and Science. Today, in our playlist, we are going to check about the risk assessment in auditing. So, risk assessment and even the internal control system I am going to explain to you. So, when we take the term of your risk assessment, so what is risk assessment? Before we enter into a particular task, we have to find out what may be, that is, we have to deduct what may be the risk which is involved in that particular task. So we cannot avoid risk, but we can minimize the risk when we are able to follow this particular procedure. So what happens, the risk is nothing but in your auditing particularly, when we are assessing the risk, we will be able to identify and evaluate the frauds or misstatements in the particular transactions and the records which they are maintained by the particular organization. So this term is known as the risk assessment. So this risk assessment, we have various objectives. So what may be the objectives of your risk assessment is identifying the areas of your high risk. So first we have to identify the areas of your high risk and then reduce the overall audit risk in the particular auditing. And again, plan effectively and efficiently with the audit procedures. And then next, ensure the reliability of the financial statements. So on this basis of the objectives, we are going to do with your risk assessment. So this objectives helps us to reduce the high risk and also to avoid overall audit risk also. So we will have a plan how to do it. What is the risk which is involved in the auditing, that can be properly identified, evaluated, and then the proper procedures can be identified. That procedures will be applied for the reliability of your financial statement. For this purpose, we are going to use your risk assessment. So what are the various types of your risk assessment we are having in your audit risk? One is your inherent risk, another one is your control risk, another one is your deduction risk. So we have three, I repeat again. One is your inherent risk, another one is your control risk, and next one is your deduction risk. So in your inherent risk, what we will be doing is, we will be able to identify the nature of the business of a particular organization. And then in your control risk, we will be controlling, that is, the internal control may fail to prevent the particular errors in the particular records. So that may be your control risk. Again, in your inherent risk, due to the nature of the business which is involved, there may be some errors which may occur. That is your inherent risk. In your control risk, the failure to prevent the internal control leads to the errors. That is your control risk. Then next one is your deduction risk. So what mean by deduction risk is, the audit procedures may be failed to deduct the particular errors or frauds. So to avoid all these three risks, one is your inherent, control and deduction risk, we are going to maintain this risk assessment procedures. So this risk assessment procedures is very must, and it can be reliable when it is properly proceeded with the procedures, analysis which is done. Everything can be proceeded with the help of your risk assessment. Let me explain with a proper example to you to understand what is risk assessment properly. To take an example of an auditor, say let it be an Arun, he is going to audit to a particular company. In that case, what he will be doing is, it is an organization in which the nature of business has to be identified, how the cash transactions are maintained, how the stocks are maintained, everything to be valued by the particular auditor. So after entering into that organization, he identified that the stock is high, but the cash is maintained manually. So this is the case in which he has to go for the risk assessment and internal control to be done by the other. So what he done is, first he entered and identified the cash maintained manually. So he entered with your surprise audit checks and then verified the stock physically, and then examined more sales transactions also. So this gave him a clear picture of how they are maintaining the records. So after this particular evaluation, he identified identified that there is errors in the cash records and also suggested improvement in the internal controls also. So this is the way in which we have to do with your risk assessment and internal control. So in case of your Arun, he first identified the high risk areas. What is the high risk areas? The cash is maintained manually. So that is the high risk area. So how to reduce the audit risk, overall audit risk? So he suggested the improvement in the internal control by way of maintaining the proper records, and we have to go with the proper audit procedures also. So when that is the case, automatically we can understand that the plan will be effective and efficient in the future. So automatically the financial statements prepared by that particular organization will be very much reliable, and they will be having more number of customers to that particular organization also. So this is the way in which we are going to